that I think is really very powerful and important to understand is that if you think Bitcoin is a commodity, and one coin's the same as the next, they are all the same. There are 21 million of them, although they say they're rare or they're rare sats. I'm not a big fan of rare sats, but whatever. To me, a sat's a sat. If you look at all other commodities in the world, gold, wheat, oil, sugar, you name it, any commodity, the laws, the way the world works is such that you say, I'm going to push the price of this up. Well, guess what?
Hey guys, welcome back to Everyday Finance. In this video, Larry Lepard discusses Bitcoin and crypto. He presents a convincing argument regarding the distinctiveness of Bitcoin as a commodity, setting it apart from traditional commodities. Similar to gold, oil, or sugar, the supply of Bitcoin is limited to 21 million. With a fixed supply, the number of Bitcoins in existence will never exceed 21 million. Regardless of how high the demand gets. This scarcity is a key factor in driving its value. In a world where the price of oil surges, producers would typically ramp up their output to take advantage of the higher prices. The same applies to gold, where higher prices encourage more mining. However, Bitcoin operates differently. It lacks the flexibility to respond in the same way. This fixed supply model is truly unique in our modern economic system. It presents itself as an unprecedented financial asset. The concept, however, can be quite challenging for people to fully comprehend. It's akin to explaining the internet to someone in the 1980s, a task that would have seemed like science fiction. Bitcoin is truly groundbreaking, and it's crucial to grasp these fundamentals in order to fully grasp its potential. In recent years, Larry has undergone a transformation, shifting from a strong advocate for gold to a fervent supporter of Bitcoin. He sees numerous parallels between these two assets. He recognizes that Bitcoin is a strong defense against the devaluation of traditional currencies. Irresponsible monetary policies implemented by central banks and the subsequent potential collapse of the global financial system were recently the focus of a thought-provoking conversation between a Lepard and YouTuber Robert Breedlove. They explored various topics during their discussion. An executive order was issued regarding the implementation of 6102. In April 1933, U.S. President Franklin Roosevelt signed Executive Order 6102, which prohibited the hoarding of gold coin, gold bullion, and gold certificates within the continental United States. This order was implemented in response to investors who were stockpiling gold, contributing to the already bleak economic situation. By curbing this behavior, the aim was to prevent further economic stagnation and alleviate the effects of the Depression. In the order, individuals were instructed to deliver the majority of their gold coin, bullion, and certificates to the Federal Reserve by May 1, 1933. They would receive $20.67 per troy ounce in exchange. During his conversation with Breedlove, Robert analyzes worrisome similarities between the economic conditions of the 1930s and the current state of the U.S. economy. He warns that the U.S. government might soon be compelled to issue a similar order, this time involving Bitcoin. And lots of things Larry Lepard discusses, so please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
The best monies have the lowest flow to stock, or the highest stock to the lowest flow.
Yes.
In other words, the supply is constrained.
They inflate the least.
They inflate the least, right? I mean, look, gold does inflate. I mean, it grows. The supply of gold in the world grows at about 1.7% a year. In 40 years, we will have twice as much gold as we have today. And looking back 40 years, we have twice as much as we had 40 years ago. So gold is inflating because we have gold mines that produce new gold. So that's the stock to flow ratio of gold, which, by the way, is equal right now to the Bitcoin issuance. But
for another week.
For another week, exactly, until the halving when it gets cut in half. And so that was kind of the first thing I said. Well, this is sounder because it will soon have a lower stock to flow. And in fact, it's even better than that, because ultimately it will have no stock to flow. As Saylor points out, in 2034, 99% of it will have been issued.
Yeah.
The stock to flow will become truly trivial, because I think it takes 100 years to issue the remaining 1%.
That's right.
So, there is no stock. There is really no, there is no flow almost, right? And so that's the first characteristic of a sound money. The other is it verifiable, et cetera. And, as we all know, the U.S. says they have 261 million ounces of gold in Fort Knox. Do they? I don't know.
Hasn't been looked at since 1954
or something, right? And they, what they claim? They claim it's too expensive to audit it. Give me a break. I mean, with all the billions of dollars they're spending, they're perfectly capable of auditing that gold if they wanted to. And so again, it's a little bit of a peas and shells game.
Sure.
Which goes along with the paper gold. So.
Perfect information about the money supply and how the money supply will change over time.
And you can't lie about those coins. We can see them all on the chain. This goes back to do we have the 261? Does China have what they say they have? Does Russia have what they say they have? Yeah. The triple entry accounting, the ability to see it, is an enormously valuable attribute of this sound digital money.
Can you expand on that? Triple entry accounting. What does that mean?
If you think about accounting, there was a big development in Italy, when they started doing double entry accounting, debits and credits and keeping score, and they shifted to Arabic numerals as opposed to what they were using for the Roman numerals before. And it allowed businesses to keep score of debits, credits, revenues, costs, and profit. The triple entry is you've got a debit, you've got a credit, and then you've got a entry on a public ledger so that everyone can see it. So if you and I have a debt between ourselves, we just have that and nobody knows about it, nobody can prove it, nobody can verify it. But if we have a debt between ourselves and it's recorded publicly and you can get on the internet and see it, that's the timestamp. That's the triple entry.
Yes.
Right? And that's a huge change, a big innovation.
Yes.
Right?
Yeah. Double entry. I think it was the Medicis maybe that started doing this.
But the bankers, in Florence.
Based on recent estimates from the U.S. Congressional Budget Office, CBO, it is projected that the U.S. federal budget deficit is projected to reach $1.8 trillion by 2025 and is expected to maintain steady growth, eventually reaching approximately $2.6 trillion by 2034. The bipartisan agency also predicts that the deficits as a percentage of GDP will increase to approximately 6.1% in 2025. There have been instances in history when the levels of financial crisis reached unprecedented heights. These include the periods during and shortly after World War II, the 2007 to 2009 financial crisis, and the recent coronavirus pandemic. These events have had a significant impact on the global economy, comparable to the Great Depression. In a previous report, the CBO expressed concern over the U.S.'s fiscal path, stating that it is unsustainable. The captured situation is worrisome, but experts believe it could be even worse than what the agency anticipates. Lawrence beautifully captures the essence of the situation in his pinned post on Twitter. Accompanied by a chart depicting the U.S. GDP as the blue line and the nation's debt as the red line, he highlights the fact that the income generated by the blue line is used to pay the interest on the red line. It's a simple matter of mathematics, as he aptly points out. Economic reality, debt vs income. Preparing to demonstrate the seriousness of the impending situation in the Weimar Republic. Larry's analysis prompts us to delve into a critical conversation regarding the wider impact of Bitcoin on our present economic environment. Ever since the U.S. abandoned the gold standard in 1971, governments have enjoyed greater flexibility in printing money, which has resulted in inflation and the devaluation of savings. Consequently, the average person's purchasing power has been eroded, making it progressively challenging to save and amass wealth. Let's get back to Larry Lepard interview. Back to Larry Lepard.
Saying the same thing that I think is really very powerful and important to understand is that if you think Bitcoin is a commodity, and one coin's the same as the next, they are all the same. There are 21 million of them, although they say they're rare or they're rare sats. I'm not a big fan of rare sats, but whatever. To me, a sat's a sat. If you look at all other commodities in the world, gold, wheat, oil, sugar, you name it, any commodity, the laws, the way the world works is such that you say, I'm going to push the price of this up. Well, guess what? Producers are going to respond and make more of it.
Yes, exactly.
High oil price, drill for more oil.
Yes.
High gold price, open more gold mines. High sugar price, plant more sugar cane. Okay? This is the only commodity, this is what's so unique about it. It's the only commodity in the world where the price doesn't matter. There are 21 million, algorithmically programmed, never changing.
Yeah.
So the price can be 100,000, it can be 1 million, it can be 10 million.
Right.
I think it will be all of those things over time.
That's right.
And yet there's no supply change.
That's right.
So it's really, I think the difficulty, and this is why Saylor says all your models are broken. The difficulty a lot of people have in getting their heads around this thing is they've never really seen anything like this before.
That's right. Yeah.
It'd be like, try to explain to, somebody who's never seen fire what fire is. Or
of course.
Just take any basic technology. You take a primitive and you show them an automobile and they'd be like, what the hell is that?
In other news, Peter Brandt, a seasoned trader, expresses his belief that the U.S. Securities and Commission, along with other regulatory agencies, are... In a recent post on Twitter, Brandt predicts that U.S. regulatory agencies are about to launch a new wave of investigations into the cryptocurrency industry. He anticipates a severe crackdown on certain sectors, particularly staking activities. The post suggests that if the crypto community is already unhappy with how the SEC is handling XRP, ETH, and other cryptocurrencies as securities, they should brace themselves for the potential actions of the OCC. The SEC and Treasury are launching a full-scale attack, which is expected to result in a fierce battle. A follow-up tweet suggests that the situation could turn into a chaotic and intense event. According to Brandt, staking is considered illegal, and the anticipated crackdown is expected to be extremely severe. Successful entrepreneur Mark Cuban has also raised concerns about the SEC and Gary Gensler's actions towards cryptocurrency, expressing his worries about potential witch-hunting activities. Cuban, the former principal owner of the Dallas Mavericks, has voiced his opinions on the matter. Gensler's actions may potentially create a divide among cryptocurrency investors, which could have an impact on Joe Biden's administration and his chances of re-election. If Joe Biden loses, there's a strong possibility that Gary Gensler and the SEC will deserve your gratitude. Crypto has become a popular choice among younger and independent voters. Unfortunately, Gensler's track record does not show any significant efforts in protecting investors from fraud. Instead, his policies have made it extremely challenging for legitimate crypto companies to function, resulting in the potential loss of numerous businesses and the downfall of countless entrepreneurs. Consider this as a cautionary message to Congress. The upcoming election will give crypto voters a chance to make their voices heard. To support Biden, you have the opportunity to address this issue by enacting legislation that clearly outlines registration requirements tailored to the crypto industry, similar to how other industries have their own defined registration processes. Cuban also proposed giving the responsibility of overseeing the cryptocurrency industry to the CFTC. It's quite concerning to see the recent interview and tweets by Lepard, Branson, and Cuban. They shed light on the inadequate understanding and misguided views of cryptocurrencies and digital assets by certain U.S. regulators and politicians. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.